Okay, good morning, everyone. And you're very welcome to this morning's InterTrade Ireland Funding Advisory Service Workshop for Established SMEs. This is the fifth such workshop that we've had this year already. Now, unfortunately, as you can see, these have been and continue to be online, but hopefully we'll be back to physical in-person events very, very soon. So keep your eye posted for that. Try to get as much as you can out of this morning. I would encourage you to use the Q&A function to ask our contributors any questions you might have. Neil, who is managing this morning or hosting this morning, I think is going to leave the questions to the latter part of the event. But do please get your questions in as you think of them, and we'll do our very best to cover them as we can. So. In addition to this morning's event, there's an opportunity to apply to InterTrade Ireland, apply to ourselves for a one-to-one meeting with a member of the Grant Thornton corporate finance team. We cover the costs associated with this, and the feedback from those companies that have availed of that, have gone on and met with Neil and Charlie and the guys at Grant Thornton has been excellent. So I'll be sending out an email, hopefully later today, if not tomorrow, with the link which you use to apply for that service. So I would encourage you, if you're currently or will be in the very near future looking to raise finance, that may be of benefit to you. So before I hand you over to Neil and the guys at Grant Thornton, I want to take literally just 2 minutes to run through some of the ways that InterTrade Ireland supports businesses, right across the island. And it literally will be a whistle-stop tour. So you can see top left section of the slide on the screen there is Get Brexit Ready. And, we have a wealth of digital content on our website, Brexit related. Our voucher scheme is still available where you can avail of some consultancy support, to look at supply chain, customs, people, all that sort of stuff. So with all this, I would encourage you to look at our website. On the funding side of things, that's the Funding for Growth team, which I head up. We have these workshops, we have equity advisory clinics, we have the seed corn competition, we have the annual venture capital conference, which we had back in March there, which went very well, I'm pleased to say. We're also a funder of HBAN along with InvestNI and Enterprise Ireland. So there's plenty happening on that space, particularly on the equity side of things. So I would encourage you, to take a look at that if you feel there was any further support that InterTrade Ireland could give. On the tendering side of things, my colleague Grant heads up the tendering team. They do a lot of work here to help demystify the process of applying for government contracts for SMEs applying for these. They run go to tender workshops. There's bespoke mentoring support, as well as the very, very well attended, very, very productive Meet the Buyer events. On the sales growth side of things, we have Elevate. Elevate is where we can provide up to £5,000 worth of consultancy support. A sales advisor with relevant expertise, to help you identify cross-border sales opportunity and I suppose put a plan together as how you might go about generating sales in the other jurisdiction. Acumen helps SMEs take the first steps onto the export ladder by helping fund a salesperson to identify and win sales in a cross-border market, I suppose in the other jurisdiction. And there's many, many examples of companies that have gone through these programs and are have now significant cross-border sales. On the innovation side of things, we have what was formerly known as Fusion, now known as Innovation Boost, and it supports cross-border businesses through developing and embedding innovation. It supports by helping fund the salary of a STEM graduate and partnering you with a third level institution in the opposite jurisdiction with the relevant expertise. So there's a funding package there to support the salary of that STEM graduate, and there's many, many other elements of that funding package. Again, if innovation is something that you're looking at, please have a look at our website and see if that works for you. On the business insights side of things, my colleagues in the strategy and policy section, are regularly performing research and commissioning research. We have our business monitor where we go out and monitor SMEs right across the island. Some really interesting insights there. Again, I would encourage you to look at our website. So as I said, a very, very quick whistle-stop tour of InterTrade Ireland. So back to today, and I want to take the opportunity to thank the guys at Grant Thornton, Neil and Charlie and Natasha and the guys for putting this morning together for us. And a heartfelt thank you to our contributors. You'll hear from Mark Cunningham from Bank of Ireland, Chris Wardle from Foresight, Jenna Mers from White Rock Finance, and Joel Callahan from Close Brothers. So as I said, thank you very much for giving up your time, folks. I know it's very, very much appreciated. And as I said, I encourage those in attendance to get as much out of today as possible by asking questions. So I'll hand you over to Neil.
Thanks, Shane, and welcome everyone. So we've covered a range of content in the last 20 months under the Finance for Growth programme, and I think that has hopefully been helpful for people to understand the market, understand your funding options, and understand the key aspects of debt and equity funding. But ultimately, the questions we tend to get come back to: here's my funding requirement, who would fund this, and what does that funding look like? So this session is really taking us back to those fundamentals, and we're going to have a number of speakers today. So we're going to have Mark Cunningham, who's Head of Regional Business Centres in Business Banking at Bank of Ireland. So as we've learned, the banks are the low-risk senior lenders in our market, and Mark's going to take us through their approach and some options. We're going to have Chris Wardle, who's a director in the private equity team at Foresight Group. So Foresight had been a very active investor in Northern Ireland for the last number of years, both on the infrastructure and renewable energy side, but also on the private equity side. And Chris is going to take us through that private equity model and a case study. We are going to have Jenna Mers, who's a senior investment manager from White Rock Finance. So White Rock have been around for probably around 10 years at this stage, an alternative lender. So we'll look at higher risk above where the banks would generally look. So again, Jenna's going to explain their funds to us and give us a couple of case studies. And we've Joel Callahan, who's a sales director at Close Brothers Commercial Finance, long established with a wide range of funding options. Joel's going to run us through those funding options with a focus on their asset-based lending. And he also has a video which we're just hoping all that it works. So that is the agenda for today. We'll then turn to some Q&A. So if you want to pop your questions in the Q&A box at the bottom of your screen, we'll pick those all up at the end. So up to our first speaker, and it's Mark Cunningham from Bank of Ireland.
Thanks very much, Neil. Morning, everybody. What I'd like to do, just maybe on the next slide, run through very quickly this morning, because we've only 10 minutes each, just a lending pathway where we see appropriate funding in the life cycle of different businesses. Talk a little bit about uncertainty, and that's probably a topic we could talk for hours on at the moment, and what that means in terms then of risk, what type of information banks generally need, and why we need it, and then some of the different products and options that we have in Bank of Ireland to help businesses develop and grow. And then what I'll do is finish with a very short case study, just to give an example of how those things tie together. So just on this slide, I think this is a pretty good depiction of the various different life cycle stages of a business. And on the left-hand side, in the R&D and startup part, often the support that we provide at Bank of Ireland for companies at that stage, it's much more in the operational side of things. That's opening bank accounts, holding funds and moving funds. But we also provide a lot of non-financial assistance. So that's the like of business introductions, helping people at networking events, and a lot of experience and guidance based on the what we see in the market. So as businesses move through the spectrum and develop and mature, and start to develop revenue and profitability, and maybe move into wider geographical markets, the level of bank funding that becomes applicable is much enhanced. And the case study that I'm going to touch on later on, the company sits between the early and fast growth stages, and I think is a pretty good demonstration of how these things tie together. So just on the next slide, I suppose this is my own kind of personal view just on looking at risk. Usually whenever we look at a proposal, the amount of money the businesses come to us look for is usually a fairly specific sum. But as that amount maybe increases and the quantum grows, then to make sure that the risk stays at an acceptable level, both for the business and for the bank, what you need to do then is try and squeeze the uncertainty and shrink that down. So, what are the different steps that we will take to look at maybe shrinking that uncertainty? So just on the next slide, these are, hopefully it'll click on. Yeah, these are typically the various different things that a bank will look at whenever they're assessing a proposal from any customers. So, and they're not in any particular order of importance, but the first one, experience, probably is the most important factor. So we look at the promoter or the business itself. What's their experience like? Have they done this before? And that's usually one of the biggest indicators for us on minimizing risk. We look at the market and the sector that the business operates in. What's the level of competition and who are the competitors? Are they involved in innovation and R&D? Are they export focused? Are they solely focused on looking at the local market? And then we look at contracts. What are the type and duration of relationships that businesses have with customers and also with their suppliers? In respect of a proposal, is the ask that the business is bringing to the bank for a specific purpose? Is it a single project, or is it wider strategic funding, to assist in growth going forward over a number of years? Naturally, we look for some financial information. We look to assess the stability of the cash flow of the business. Will they have the capacity to repay their debts? What's the quality of earnings like, and how reliable are those earnings? And then if a business is in growth mode, what are the various different factors that impact on their working capital requirements, and how will they help grow? How much credit do they get from suppliers, and how much do they give to customers? All those things are very important in terms of cash. Increasingly, the regulatory and compliance agenda is becoming much more of a focus, not least in banking, but I know this affects nearly every business now. So, how does legislation affect you? Health and safety, and increasingly, customs impacts of exporting and Brexit and things like that. Management, again, this kind of loops back to the experience part. So, what's the skills of the management team? What's the breadth and depth of the management team? Is there a second tier coming through? And who are the key people within the business? And last but not least, collateral or security for borrowing. In most cases, that's a requirement, but not in all cases. And there are various different ways of unlocking some of the assets that you have within the business to try and provide that kind of recourse that often banks will require. So just on the next slide, what are the things that we will typically look for in a lending proposal? And I suppose the message I would give here is that we'll always start looking at any proposal with a view that we're looking to lend to your business. We're keen to do that. And these are the type of steps that we will take to confirm that it's the right thing, both for you as a business and also for us as a lender. So we look, again, as I said in the previous slide, at borrowers who have experience and a good track record. We look to see often a business plan with input from professional advisors, the likes of a Grant Thornton, who will provide a lot of kind of critical analysis for you and give some good breadth and sectoral expertise. We want to see projections that are realistic and have some kind of scenario planning or sensitivity analysis, and stress tested, so at least we know that there is a plan B if things don't go according to plan. We'll also look at what's the appropriate lending structure for the company. And again, look, a good advisor will help with that. Are you looking for the right type of facilities for what you're looking to do? Is a term loan appropriate, or should it be more an overdraft? And we'll also want to make sure that the promoters have a really good and clear understanding of the sector that they're involved in. Again, as I touched on before about competitors, what are your USPs? And a bit of SWOT analysis is also a good thing to do. So what are the things we don't like to see? And some of these are probably a little bit obvious, but they do occur more frequently than you might expect. We want to see good quality information. And again, getting back to the business plan that's well prepared by an external set of eyes, I think is really helpful in that. We like to see figures that can be backed up. Often what we're trying to do is fund growth, and we need to have some really good metrics to make sure that those assumptions are realistic and achievable. And we also need to ensure that there's a decent level of contribution from the promoters themselves. Equity contribution needs to be meaningful. It needs to be appropriate. we always like to see some element of skin in the game, and we'd like to see some element of risk borne by the business. So what are the various different types of funding options? Just on the next slide. Look, a lot of these are very familiar, and I'll not go into them a huge amount of detail. Overdraft, look, probably the most common one that a lot of businesses would have, that just to manage cash flow. Term loans, which are typically longer term for fixed periods with fixed or variable interest rates and regular repayments. Commercial mortgages, which typically businesses will use to fund premises acquisition, and they're often done through pension vehicles or separate SPVs. Invoice or debtor financing is a really good one, which unlocks the value of a really important part of your balance sheet and your debtors, and it's especially good for looking at business who are in growth mode. Stocking facilities, we have a product in Bank of Ireland called Stockline, which is insurance backed. A real big benefit of that is it doesn't require any additional security because it is insurance backed, and will also help businesses deal with seasonal peaks and troughs, and it can also help if you're buying in bulk, where you can maybe negotiate a better discount. Trade finance, which facilitates safe export and import of goods, again reduces risk for businesses and also can be used to unlock cash as well. And asset finance, again, a very common feature for most businesses, buying plant and machinery or vehicles, and repayments generally align with the useful life cycle of the asset. So very quickly moving on to a case study. This is one that we did very recently. Funded a management team buying a majority stake in a medical business. These guys worked within the business and effectively run it for a number of years, and the founders of the business were looking to part. And we also provided some working capital to facilitate further growth. So the project itself, a total cost of just under £3 million. The advisors compiled a really good business plan covering all the various areas that I touched on in the previous slides. And we were able to get a deal approved with a modest level of equity input from promoters. I think it was around about 10%. A bank term loan of around about 50%. An element of the consideration was done on a deferred basis, where the vendors were happy enough to accept some payments for a period of time. And a private investor also came in to provide some funding and some really important non-exec direction and support as well, which is really beneficial. So we also provided some working capital facilities that the company wanted to get involved more in export, and that business, since the transaction completed, has really thrived and is ahead of schedule and repaying its debt well. So just on the last slide for me, just to conclude, so what should you expect from your banking relationship? For me, your banker, will be your advocate, in terms of putting forward proposals to get approved. So they really need to understand your business inside out. So feel, that you should really share information as much as you possibly can with them. Again, like I touched on about managing risk, ask your banker how to help do that. We have experience of dealing with thousands of businesses on a regular basis and see some really good examples of how businesses can do that. As I talked about communication, make sure that if there are any issues or anything the bank needs to know, that you engage early, and it'll be a real benefit in devising solutions. And finally, for me, just get more value from what the bank do for you. It's not just about money. So ask for introductions. Who would you like the bank to be able to introduce you to from the very wide network of customers that we have? Networking opportunities like events like this, particularly whenever they're in person, they really help you build connections, and you learn a lot and get a lot of really good advice at things like that. And recommendations, finally, for me, who do the bank think you should be talking to and dealing with? Again, it's like the introduction piece, but don't be afraid to ask the bank for that as well. So that's me. Neil, back over to you.
Thanks, Mark. Really useful. I mean, the banks remain the cornerstone of our funding market here, so always useful to get a summary like that. Very helpful. So yes, next speaker up we have Chris Wardle, who's a director in the private equity team at Foresight, and just going to hand over to you, Chris.
Thank you, Neil. Hopefully you can all hear me. Good morning, everyone. So I thought I'd do a bit of an introduction to the kind of private equity world, because it can be a term that can kind of mean various different things and can sometimes be seen as a little bit murky. So as I take us through today, I think what I'll do is I'll start by introducing Foresight just briefly, because there are a couple of different parts to it, and the way that you interact with them might be different depending on who you are. Then take us through a bit of the kind of private equity model. So, I think one thing that's very important if you've done sales ever, and raising funding is just another sales process, is to understand who you're speaking to and how their model works. So I'll kind of take you through a very high level model of how the private equity world works so that you can kind of get a sense from the other side. I'll then take you through some kind of broad themes that we look for when assessing businesses, and the kind of process that we go through, which kind of helps you kind of prepare, would hopefully help you prepare for those types of meetings, and then run through a case study. And a bit like Mark, actually, I've chosen something that sits right in the middle of the types of things that we generally do. So something that's a bit of a mix of kind of a growthy and also a buyout transaction. So just on this slide, just wanted to give a bit of a background to Foresight Group. So we're a reasonably large equity manager based in the UK, but with offices around the world now. We were originally founded back in the 1980s doing very early stage venture capital stuff. So software and hardware, companies that were investing in software and hardware companies that were, a figment of someone's imagination in some cases. And actually, as time's gone on, we've started to invest in later stage and matured businesses, but really focused on kind of the SME end of the market. As you'll see if you ever go on our website, it's very kind of environmentally friendly, ESG led. And I think Neil mentioned in his introduction that we do quite a lot in the renewable energy space across the island of Ireland, actually. Solar, waste to energy, wind, and that is increasing over time. Let's go on to the next slide. So I mentioned there was a couple of different parts to Foresight Group, and so I sit in the bit on the left-hand side, which is what we call our kind of smaller companies or our private equity team. Just on the infrastructure side, quickly, that's actually a bigger part of our business. And if anyone in the meeting, in the room, has got any kind of infrastructure kind of elements to their business, would be that energy, forestry, telecoms, big ticket stuff, those guys can write up to maybe £250 million of equity into individual investments. On the left-hand side where I sit, we are exclusively focused on supporting generally regionally based small and medium-sized businesses. So writing investment checks from 1 to 10 million generally. We can do a little bit lower and we can do a little bit higher. And I'll kind of take you through some of the types of things that we do, but they can range all the way from kind of very early stage venture businesses where you've got no revenue, all the way through to more mature. I was a bit late for this call because I was on a meeting with a business that's kind of making £3 or £4 million of profit that's looking to do a management buyout. So and everything in between. Thanks very much. I'm going to move on to the next slide. What can I do? So I think I won't go through this. We're generally doing a reasonably good job of investing in this under this strategy, and the high returns that we generate are not the result of what you often see in the private equity market, which is high levels of debt, financial engineering, all of that kind of stuff. What we like to do is we like to be very supportive investors, sit on company boards, introduce people to our network, drive top line growth, internationalize businesses, do the simple things right. So focus on sales and marketing, etc. So I mentioned that I'm going to introduce you to the business model. So it's pretty straightforward, actually, probably more straightforward than a lot of your businesses out there. So what we do is we go out to investors, so generally pension funds, and say, look, you've got a load of allocation to the public equity markets, you've got public debt. Why not do a small slither of the money that you manage for your kind of trustees, put it into something a little bit more risky, typically kind of those alternatives sit as private equity and hedge funds, private debt, and a few other things. We then set up a fund on their behalf, and we then use our kind of local relationships across the UK. Apologies, Northern Ireland is not on that map. To kind of go and source investment opportunities and meet management teams. We actually see probably a couple of thousand people of these per year, and we actually don't have an office in Belfast, which is why there isn't a dot on that map there. But are hoping to at some point in the near future. We then go and screen a load of potential investments, negotiate the transactions, and then kind of build and incentivize the team to deliver a hopefully more aggressive growth plan than they did have in place before, or to kind of cash out an incumbent management team that have kind of already done the distance and are looking to realize their investment. And then we help to sell businesses either in a secondary transaction to another private equity firm, a trade buyer. I'm currently selling a couple of businesses at the moment where, yeah, we're probably selling to, well, in both cases, we're selling to overseas trade buyers. So, you know, larger trade buyers in the US, in both cases, actually. So in terms of what we're looking for, you know, we're a generalist investor. So we'll look at things in all different types of sectors, but generally, you know, high levels of organic growth, good visibility on revenues and margins. And with that comes scalability. You know, management is 50% of the equation. So, you know, I think Mark mentioned it before, but we're exactly the same. You know, half of our assessment is on can the management, what is the plan and the business model. The other half is can the management team deliver it, and can we supplement them to help them do that. And well formulated strategies, but we will look across all sectors. We just go on to the next one. I'll try and quickly take us through a case study. So, as I mentioned, this is something that's kind of in the middle of what we do. You know, one end of the spectrum, we're looking at kind of early stage venture stuff. At the other end of the spectrum, we are looking at, you know, very larger, more established businesses where you're probably expecting less growth but more cash generation. And there's probably a couple of those that we've actually done on the island of Ireland, not that recent, not that far in distant past. This is something in the middle. So this is actually a restaurant chain that we backed in 2017 and has gone very well for us. Not sure if anyone's been here, but it's effectively a kind of Indian street food concept that was set up by a lady that was a barrister originally, decided she wanted to be a restaurateur, and so set up an Indian street food business in Liverpool, and had had opened her second site when she came and spoke to us. So actually, the way that we met was actually through Grant Thornton in Manchester. So thank you guys for that, who were an advisor appointed by her to go and find the ideal investor. So Grant Thornton, you know, pick a good advisor and make sure that they know the people that you might want to partner with, because this is going to be a marriage, not a one-night stand. So you need to make sure that you're meeting the right people. So speak to someone like a Grant Thornton, and they will have introduced Nisha to probably 5 to 10 potential investors. You know, you have to. It's not just about the money. It's about the ability to add value, to the ability to stomach working with each other in close proximity to 3 to 5 years, which is a typical hold period for these types of things, and availability to extra capital as you want to go on. I mean, Mowgli was an attractive business because it was profitable at the time. We thought there was actually a gap in the market for this concept. Nisha was very, very driven, and it was an attractive kind of regional concept, which we think, you know, if you can do it outside of London, you can definitely do it in London. So you kind of sell that London as the kind of growth story. I'm running out of time. So we did a transaction where we put in some growth capital so that it could roll out to another 10 sites, which they've very successfully done, and also paid and also did a bit of equity release for the founder. So Nisha got a little bit of cash to pay off the mortgage, pay the school fees, and from what I understand, fund her lifestyle. And then we had and then we brought a team together to help supplement Nisha, who was an excellent operator, with some people from our network. So Karen Jones founded Cafe Rouge. She is on the board of Hawksmoor, which is a kind of steak restaurant that's now rolled out to the US. We brought in a finance and ops people as well, and that has really built the kind of professionalization in the team and allowed the business to scale quickly. And you can see the results. You know, we've increased revenue from £5 million investment up to 20 today, and profits have gone from, you know, break even, loss making, all the way up to £4 or £5 million of maybe more actually. And so there's amazing opportunity for us to support on exit now, and over the coming months. I think that will probably make happen. Thanks very much. If anyone's got any questions, I'm happy to answer them later.
Thanks for that, Chris. Really, really helpful, and I think it's useful for people to understand, you know, the financial side of the private equity model, but also it's all about support and growth. And I know a couple of businesses in Northern Ireland, Hospital Services Limited, 352 Group, they will attest to that. They've both grown significantly with the support, financial and otherwise, from Foresight Group. So yeah, really helpful to hear from you. Next up, we have Jenna Moores, who's Senior Investment Manager at White Rock Finance. So I'll hand over to you, Jenna.
Thanks very much, Neil. So I just hope to give you a bit of a flavour today of who we are and what we do. Just on the next slide there, it outlines, you know, White Rock Finance is a locally owned fund manager. We've been operating in Northern Ireland for the last 10 years. We have an experienced team of 12 professionals from accountancy and banking backgrounds, and we operate right across Northern Ireland. Our current funds form part of the InvestNI Access to Finance programme, and we have 3 under management. So the Growth Loan Fund 1 was launched in 2012 as a £50 million fund and was subsequently topped up to 55 million. That was fully deployed by the end of 2018. Under that fund, we made more than 135 loans to over 100 companies, and we're currently in that repayment phase. The private investor in that fund has now been fully repaid. So following the success of that fund, 2 additional funds were launched, Growth Loan Fund 2 and the Growth Finance Fund. Those both opened at the end of 2018 and are actively investing. Both are £30 million funds. They have slight eligibility nuances due to the different investors involved. So the Growth Loan Fund 2 was the successor fund to Growth Loan Fund 1, and it's fully funded by InvestNI. The Growth Finance Fund is funded by InvestNI, the British Business Bank, and NILGOSC, the local government pension scheme. So essentially, it doesn't matter to a borrower which fund they borrow from. Both funds have comparable terms and criteria. It's just an internal decision for us. The next slide then outlines our funding and the eligibility criteria. So combined, the funds provide loans of between 100k and 2 million into any one company, generally over a 2 to 7 year term. We have the flexibility to offer interest-only periods and partial bullet repayments if the company's cash flow requires that. Follow-on funding is also available as our portfolio companies grow and require additional working capital. Many of our current portfolio companies have obtained more than 1 loan from the funds, and we're very keen to support their growth going forward. Pricing is risk dependent. It's generally made up of an interest rate of 6 to 8% and a monthly or annual charge, depending on the amount borrowed. To be eligible, a company must be a Northern Ireland-based SME, which can demonstrate both growth and export potential. A company doesn't currently have to be exporting, but it must have that in its short-term plans. And by export, we mean just selling outside of Northern Ireland. So that includes both mainland UK and the Republic of Ireland. Companies that apply to us must demonstrate a funding gap and show the ability to service the loan repayments from their projected growth. We tend to be an awful lot more forward-looking in our assessment, and we're focused on the future opportunities of the company and what our funding can help them achieve. In any instance, we're always happy to to discuss any opportunities informally, but will eventually require a business plan and an integrated set of financial projections for a minimum of 3 years. And I suppose just to reiterate the slide that Mark had on what makes a good lending proposal, I don't think there's anything in that we would disagree with, and we would look at the same sort of criteria as the banks do. Just on the next slide then, I've outlined some of the uses of funding that some of our portfolio companies have had. So our funding doesn't have to be used for anything specific. It can be used to support anything from fixed asset purchases, R&D, employees, advertising, to the purchase of a trading property, stock purchases, and really just general working capital demands. On the next slide, I've outlined some of the sectors that we've supported. We have a very varied portfolio of companies from right across Northern Ireland, and we have no sectoral focus. Now, I suppose certain sectors are excluded under the EU risk capital guidelines. Those would include coal mining, shipbuilding, steel production, and we can struggle a bit with pure property development. Now, the purchase of a business premises by a trading company is allowed, but I suppose residential or commercial property development is excluded. On the next slide then, I've outlined some of the complementary funding that we have. So we have really good relationships with the local funders, so the local banks, equity funders, asset finance providers, and invoice discounting providers, and we quite often would fund projects alongside another provider. So just to give you a bit of a flavour of our funding, on the next slide, I've got a couple of case studies. The next one, yep. So the first company then is a long-established manufacturing company based in Belfast. So prior to our funding, the company had a funding mix in place, which included a term loan, an overdraft, an ID line, but they required some additional working capital for growth. So the company received several loans from the Growth Loan Fund 1, which have now been fully repaid, and recently received 400k from Growth Loan Fund 2. So as the business was expanding quite rapidly across Eastern Europe and required funding to purchase stock to be able to increase their manufacturing capabilities. There were various loans, and they were used for different things, from new product development, advertising and marketing, employee growth, to stock, and I suppose production process streamlining as well. Since our initial loan, the company have developed a varied range of market-leading products, and they've recently invested in a state-of-the-art production facility. I suppose to date, the White Rock funding has allowed the company to increase turnover from 2 to 14 million. EBITDA has increased by 130%, and an additional 100 employees have been taken on. I suppose, there remain significant opportunities for that business, and we hope to form part of their growth story going forward. And then on the next slide, I've outlined a slightly different portfolio company, which was an early stage e-commerce business. The company had raised significant equity and taken on shareholder loans to drive the initial growth, but they had reached the stage where external funding was required to drive that growth further. The company received an initial 400k from Growth Loan Fund 2, and then received an additional 1 million from the Growth Finance Fund. So I suppose since our original funding, the company has expanded quite rapidly across Europe. They've added 7 new territories, and as a result of those new territories, there was a requirement for additional stock, for advertising, for web development in each of those countries. So the company then required the follow-on funding. In the last 3 years, the White Rock funding has helped increase turnover from 500k to 7 million. EBITDA has increased by 540%, and they've taken on an additional 25 employees. The company continues to expand quite rapidly, and they aim to add additional territories over 2022. And it's a company that we're very keen to watch going forward. Just on the next slide then, I've put an overview of our property and commercial finance brokerage division. So I mentioned previously that the funds that we have are dedicated to trading SMEs and don't extend to traditional property investment. So over the last few years, we had received a lot of inquiries that were outside the scope of our funds. And as a result of that, we recently set up the property and commercial brokerage division. So over the last couple of years, the brokerage team have developed relationships with both traditional and alternative finance providers across the UK and Ireland, and aim to be able to help where the funds can't. So as well as mainstream banking, the range of funding includes property finance, asset finance, invoice discounting, working capital facilities. Our aim at White Rock is to be able to assist with any inquiry we receive, either through our traditional funds or through the commercial brokerage division, or through a combination of the two. So just on the next slide, I've included my contact details if anybody wants to pick up with me after the webinar to discuss their funding requirements. Thanks very much for your time. Back to you, Neil.
Thanks, Jenna. Really helpful. I know White Rock have helped literally hundreds of business. You references in your slides there, and I think it's also interesting the point about complementing with other funders, in particular probably the banks, and that's I think useful for people to know that you can bring multiple funders together. So next up we have Joel Callahan, who's a sales director at Close Brothers Commercial Finance. So over to you, Joel.
Thanks, Neil. Yes, I'm Joel. I'm based at the Commercial Finance Division of Close Brothers here in Belfast. If I flick to the next slide there. Yeah, Close Brothers was founded in 1878, so we're rapidly closing in on our 150th birthday. We've had feet on the ground here in Belfast since 2012. We're a FTSE 250 company with a market cap of 1.7 billion, and we've group employees of 3,000 staff based principally in GB, but with divisions in Ireland and in Germany. I suppose our core principles really are, that we find we're sector and market specialists, as in that we operate in areas that we understand. We think our approach is commercial and considered. We lend through the business cycle, both business cycles and economic life cycles. And with a track record of doing so. So as you can imagine, opening a division in Ireland in 2012 at the height of the recession was a challenge. Our businesses are local, with people on the ground, with local decision-making capabilities. And finally, we really value our clients, and that's why we're focused on our face-to-face business model. Ultimately, we are an SME funder, and we recognise that working capital borrowing decisions of business owners are of critical importance, and one that's not made lightly. If you can flick on the next slide there. As I said earlier, Close likes to focus on specialist markets. We're not trying to be all things to all men. So this slide sets out the various divisions that we have within the business. Not all of them operate in Ireland. So if we look at the ones that do operate in Ireland, you've got the commercial division, which covers invoice and asset finance, which I'll talk about a little bit later on. We've motor retail, so you'll see some second-hand car forecourts. We've premium finance, which I think we're responsible for over 50% of the insurance premiums on the island of Ireland. That's through a broker-led network. We do renewables through the leasing division, so primarily wind farms, but increasingly solar is of interest. We have the Braemar division, which looks at finance for professionals, doctors, dentists, accountants, solicitors. We've also got the likes of brewery rentals, and it's important that you understand that, okay, I'm a point of contact here in Belfast. If the deal's not for me, it's then about seeing whether it fits within our division and sending it across to the right person, making, connecting the right people. For instance, I've recently just referred across a business that's to our brewery rental team that has a requirement for distillation equipment. Obviously, they're brewing alcoholic beverages. So we have these niche areas that a lot of people wouldn't necessarily be welcome or are aware of. So if there's anything there that you think is required, give me a call and I'm happy to put you in touch with the right person. I think it's also important to point out that in Belfast here, we also have property finance, which is primarily residential development. If you flick on the next slide then. Many of you will have worked with some of those individual business units, and sometimes we're seen as a bit of a niche player. We recognize that it is important for you to understand the strength of your finance partner, and this really is just a peer analysis to show that have a strong track record of delivery and performance. You know, Moody's ratings, people take them with a pinch of salt, but it does demonstrate, you know, how we have delivered in the market and how we're seen by investors. So you can flick to the next slide then. As I say, the part of the business that I'm involved in is the asset-based lending. It covers asset finance, new and existing, invoice finance, and asset-based lending. ABL, as it's more commonly known, is a common technique in the UK structured finance market. It's flexible funding that really works alongside your invoice finance, and it's used for a variety of uses: MBOs, acquisitions, refinancing, restructuring, and growth. And as you see, look, we do the new and existing refinance as a standalone product. The refinance is very unique, and we're a market maker in the GB because we do so much of it with in-house valuation capability in respect of that. You know, then on the strength of doing invoice finance, you know, we can put in the wider ABL product, where we will look at funding commercial premises. The LTV really is driven by location, and we'll also do cash flow loans for cash generative businesses. And we do have an inventory facility, but that would be for people holding stock of £1 million plus. Over the last 6 months, we've probably done deal sizes from anywhere to 100,000 to 15 million, covering acquisitions, restructuring, growth, you know, for a business that was expanding into a new sector, and then also, you know, for businesses just simply want to refinance to increase their working capital. I think if we go on to the next slide, there is a case study here. I'll be honest, it's a case study driven by across the water in GB. If you go onto the website, if you're sitting with a spare minute, either before bed or in an airport, you know, if you flick onto the website or you flick onto YouTube, you'll see a number of these. It's rather than me talk you through it. Hopefully, if we go to the next slide, the video will work. Oh dear. Unfortunately, it doesn't look as if it's going to work. You know, as I said to you, it's of interest.
Easy Cleaning Solutions are a chemical manufacturing business. We make household cleaning products, things like Easy Cleaning Solutions are a chemical manufacturing business. We make household cleaning products, things like wash-up liquids, bleaches, disinfectants and sanitizers. So these are products that we all buy every day.
The products we manufacture are essential household cleaning products to actually fight against COVID-19.
COVID-19 and the lockdown has been a challenge for us, like it has for all businesses. And the demand for our products has grown really significantly.
We have a very young, flexible workforce here. We've been able to lay on additional shifts, we've been able to lay on additional hours, and what we've been able to do is basically meet every single customer request that we've had.
COVID has been a game changer in some sense about the way consumers view our products. And clearly we've got a role to play in ensuring that we provide products that really support that whole new demand. We started to work with Close Brothers around 7 months ago, and they were really accommodating. They had great people. I think for us that's important. We're a privately owned business, so relationships is really important. As a result of the facility that Close Brothers provided us, we've been able to expand the product range faster.
The business now has a more exciting opportunity where we can really thrive within the marketplace. We're really at a time now where the business can really push on to the next level. It's a long, slow road to get to world-class manufacturing, but we're on our way.
I'm most proud when I see our products on shelf and you see consumers coming and picking that product from shelf, because ultimately that's what we're about. We're about producing products that consumers really like.
I have a fantastic team of people underneath me. We all strive to be better every single day.
So thanks for that, Joel. I'm glad the video eventually kicked in there. And I mean, interesting obviously to see that, you know, your business will look at cash flow, but you're also looking at asset-based lending. And I think it's important for businesses to, when they consider funding, to look at all of the assets they have on their balance sheet and where there is potential to borrow. So bit of time here for Q&A. Anybody has a question, feel free to pop it into the Q&A box or into the chat. We'll pick it up. An initial question, and probably an obvious question, just to the panel. I mean, there's a lot going on at the minute. We've had Brexit, we have had or are having COVID, we've supply chain issues, with labour issues, we've inflation, we've obviously the situation going on in Ukraine. You know, I think Mark referenced it at the very start of his presentation. There's a lot of uncertainty at the minute. He could probably do a whole session just on that. But how are you as funders managing that uncertainty and supporting customers where they're severely impacted by that uncertainty? So open to anybody to jump in.
Joel, or sorry, Neil, if I maybe jump in first. I think the point I made is about dialogue. I think it's really important to have those discussions with the bank as early as you possibly can, and look at the various different impacts that they have on your cash flow and your working capital. What we've had to do with a number of different customers is, particularly on the supply chain part, many customers source product from all around the world, and those times are just extending dramatically. So a big working capital knock-on impact for customers on that. So we're having to look at extending and increasing facilities across the board on that. But the important thing is to maintain that dialogue with the bank and keep them informed. And I think if you do that, you'll generally get the right response.
Yeah, I can add on that. Yeah, I think that's right. I mean, the way that we look at it is, you know, you're right. There's so much happening at the moment, and different businesses in our portfolio felt it in different ways. I mean, the way that we generally look is, unfortunately, to be quite pessimistic. So if you're looking forward 6 or 12 months, try and run reasonably pessimistic scenarios to make sure that you're planning for the worst, because the worst thing to be is kind of unprepared for these types of things. I mean, good example was probably the COVID year, where no one could have ever predicted that, and so no forward planning could have been done. I think in that case, we are, you know, we spent a lot of time with our portfolio sharing. So we've got 130 portfolio companies, and you know, people are innovative, and people start finding solutions, and people start identifying problems at different times. And so having a bit of a web of sharing of kind of knowledge, solutions, planning was really, really helpful during that kind of very uncertain time. I think in a weird way, where we are now is in a more, you know, it's a known unknown, isn't it? That we know inflation is happening. We know supply chains are already strained. We are seeing it pop up at different times. I mean, middle of last year, we had some material supply chain issues in a couple of our portfolio companies because there was this big kind of return to work, and a lot of workers didn't want to come back to certain types of jobs, and there was still a lot of people off sick, and suppliers were prioritizing their biggest customers, which often wasn't us. But now you kind of look at the next year and you're like, okay, well, we know there's going to be supply chain issues. We know there's going to be cost price inflation of certain non-ferrous metals and this kind of thing, and so and wheat and other inputs, and you're like, okay, well, if we assume that all of that stuff happens, what does the balance sheet need to look like, for example, and what does the team need to look like, and do we hold back some of our investment in capital and things like that, or delay it a little bit, or stretch it so that if the worst is to happen, or the worst case scenario, then we're not exposed and we can kind of get through. And so we're seeing quite a lot of that happen as well. So businesses are raising some equity to kind of shore up balance sheet, making sure that hiring plans are maybe stretched a little bit, deferring some capital investment, that kind of stuff. But yeah, all of the above, really.
Yeah, so it's really, I mean, the problems are right in front of us. It's a case of planning and projecting for those scenarios, really. Another question in from James McConvey. Do any of the companies today help innovative startups? So I know probably, banking, close brothers, probably not in your space. Chris or Jenna, any of you want to jump in, whether that's something potentially you might fall within your scope?
I suppose for us, Neil, we would look at earlier stage businesses, but we wouldn't really have the ability to fund startups. We are term loan providers, so there might be an initial period where, if the company's projections require it, that we could offer an interest only period, but they really would need to demonstrate some sort of market traction initially for our funding.
So we do. So we've got I tried not to get bogged down in the various different pots of money that we manage, but one is specifically focused on startups. So we've got a joint venture with the Williams advanced engineering team. So the other side of the business to the racing car bit that doesn't do very well. And so the aim of that fund is to back innovative startups, particularly ones where Williams can add some value. So generally it's kind of engineering-led materials, technology around manufacturing, robotics, all of that kind of stuff. I mean, we don't really have a pot of money that does things like if it was a brand new startup concept restaurant, we wouldn't have the pot of money for it. But if it's a technology-led thing, then that team would definitely take a close look.
Yeah, no, that's helpful, and your website's very good on that. So
yeah, certainly. I think if from our perspective, we will do invoice finance. You're then looking at what collateral security would come in. You need to see that you either have the cash flow for repayment, or else you need to have the collateral that makes it undoubted. So there's not a simple yes or no, but we would look at it to see if it's an option and give a quick yes or no.
I think, Neil, from my perspective as well, just jumping in there, I mentioned like we do provide an awful lot of support for new startups and innovative companies, but it's not typically in the area of providing lending and funding. So we do provide a lot of advice through partnerships with people like Catalyst. Like we spend a lot of time with innovative companies over there in a mentoring and coaching role. So I think that's equally as important for many of those businesses as funding. So.
Okay, thanks for that, Mark. Yeah, that's helpful to know. Obviously, the bank's wider role in the supporting the business community is important there. I think that's basically us up on our time today. So all that remains for me is to thank the speakers and thank everyone for attending this InterTradeIreland webinar. So thanks to everyone, and have a good day.
Thanks very much, Neil. Thanks, guys.
Thank you, everyone.